Hey everybody, it's Mike from Orderflows, and in today's video, I'm going to talk about the concept of trap traders because it's an important one in order flow analysis. And before I jump in, again, if you haven't already, be sure to subscribe to the channel and hit the like button if you'll enjoy this video, and be sure to leave a comment down below. I do go through the comments, and sometimes I do make videos based off of them. So, trap traders, okay? It refers to traders who have entered positions at unfavorable price levels and are essentially trapped in losing positions. And sometimes you could see them at reversal points, okay? And this is a bonds, a four-range chart. I like looking at bonds on a four-range chart and just looking at this move here, right? Let me get the crosshairs up here. We have this nice little swing high here, this little double top at 116.25, and then we sold off down to down to 03. Okay, so a move from basically 20 down to 05 in the bonds. That's a nice move. Today was CPI day, and I'm not even going to talk about that big move here lower because you're not going to be trading when the CPI comes out. But when analyzing order flow, trap traders can be identified by significant imbalances or excess buying or selling interest that occurs at certain price levels, right? This imbalances suggests that there's a large number of traders who have taken positions around these levels. And then once the market starts reversing, okay, because what you'd have here is you'd have aggressive buying and strong buying interest up here near the 24, 25 area. And once these traders can't move the market higher, essentially they're trapped, right? And the market starts drifting down because now what you've done is you've had aggressive buyers come in, right? Help move the market up, but they're still buying. But once they sort of run out of bullets, right? And it's sort of a combination of things. One is sort of running out of buying interest, right? They run out of buying power. And two, sometimes it's a bit of FOMO, right? Everyone sees, oh, we're coming back up to this double top. We're going to break out and go higher up to 117 even, right? So everyone's rushing in. Once they've rushed in and they've bought, you sort of have no more buying interest, right? And what's going to happen is the natural order of the world, selling interest is going to come in and it's going to move it lower because everyone that came in buying helped move the market higher, they're done. Okay, so you don't have that aggressive buying necessarily in the market to help move the market higher. And if you're looking at a bar chart, you can't tell that. Okay, I know some people, I see people post things, oh, you have trap traders down here, trap traders up here. Anytime there's a big wick, they say, oh, there's trap traders. And that's just kind of BS. But if you're looking at the order flow, there are signs that you can look for that make it a lot clearer, right? So why wouldn't you use the tools that help you to understand the market better? Okay, and that's why I created the Orderflows Trader software. It's for my own use. Okay, then over time people saw it and like, hey, can I get a copy? That's how the Orderflows Trader went on from there, because I was using a footprint for my own trading, a different person's footprint, and I sat down and said, hey, can I take my concept of how I look for trap traders in the market, can I put it into a footprint so it's going to highlight it to me? Okay, and we don't call it trap traders, we actually call it imbalance reversals. Okay, because remember, right, what you're looking for is excess buying or selling interest that occurs around certain levels, right? And it's often seen through imbalances. Okay, so let's just take a look at it here. It's a simple tool. Okay, let's call it imbalance reversal right here. I was going to enable it, add it to my chart. And I can see right here, I've got an imbalance reversal, which is indicative of trap traders, and the market sold off. That's this, this is a double top, but it's coming in actually on this bar right after the double top, right? It's coming in this bar right here. Being able to identify easily and quickly where there's trap traders, it makes life a lot easier as a trader, right? You don't have to sit here and sort of wonder, oh, is that trap traders or not here? Let me just make one little adjustment here on the candlestick width, just to expand the candle. And again, let me just remove it, and I'll sort of take you through what's taking place here on the footprint. Where is it? Imbalance reversal. Okay, disable. you can see here, right? This is it. Right? You can see this buying imbalance, 1056. You even got a nice selling imbalance, 1869. So what happened, right? Market came back up to this double top at 25, starts coming down, trades down to 19, starts coming up, right? You got a strong aggressive buying here, 253 versus 1056. That's a buying imbalance, right? I use 4 to 1, 400%. You even got a strong bid here, 1869. So you know buyers are coming into this market, both aggressively, right, lifting this offer here, leaving a nice buying imbalance, and passively, right, leaving this nice selling imbalance here, right? Because what happened? Market gets up to 24, strong selling comes in, right? It's 23, 24. Nice big size bid here that's getting sold into, and the market drops, okay? And just keeps dropping, right? Gets down to 03 here, but essentially, 05, 06, 07 is good enough. And again, it's can be easily identified in the order flow. This is actually one of the original tools that I had in the Orderflows Trader, almost 10 years ago. And, even today, it's still very valid. Okay, so let's just take a look. This is a bond 4-range chart. Here's one right here. This is 742. Again, we had the CPI this morning. Okay, and just to refresh your memory on what happened in the market on the CPI, this happened. Okay, so honestly, you're not going to be trading during that time, or 15, 20, a half hour afterwards once the market settles down. But there was a little imbalance reversal here at 742. Market did sell off a little bit. Again, I'm not going to say there was one here, but there was. Again, at 732. You're not going to buy. It takes a lot of guts, honestly, to buy right after the market drops from 118 down to 116, two full handles to try and pick a low. But again, there was a sign here of trap traders. But let's go back to, again, and this is when the number came out at 7:30. Let's go back to the previous day. Okay, well, this was at night. This was 2 in the morning here. This was at 9:30. Did the market go down? Not much. I mean, honestly, trading bonds ahead of CPI at 9:30 p.m. is a snooze fest. Even here, 2 in the morning, again, I'm a little surprised the market did get this rally. But let's take a look at the previous day. Okay, so 3 in the morning here, imbalance reversal, trap traders coming in right here. People think that trap traders, right? Let's just go back to a chart I like to look at on bonds is a 4-range chart. People automatically think that traders have to be trapped at highs or lows. Okay, they don't, right? Traders can be trapped right here. They can be trapped right here. They can be trapped almost anywhere. Basically, it's people that are in a position and the market is moving significantly against those guys. Okay, that's what trapped means. It's traders that are holding losing position. Sometimes the reason people think that, oh, there's trap traders down here that cause this market to rally. No, it doesn't, because probably the volume that traded down here is just a couple hundred contracts, right? Each of these bars trade thousands. So, if there's 900 or 1,000 traders that sold down here into the low, they got to cover it. It's not going to cause this big, massive rally because there's, in bonds and most markets, there's healthy volume. There's, this bar trades probably 5,000, the next bar 7,000, the next bar 6,000. Those traders that sold 1,000 down here at the low, there's plenty of liquidity to get out, right? They're not getting squeezed that there's no liquidity. There's plenty of liquidity in these markets, and but people think that, oh, the traders are trapped here and it causes big market rally. No, it doesn't. I mean, just look at the liquidity of a market. Here's the depth of market in the bonds right now. Every bid price got over 1,000. Every offer price basically got over 1,000. This one's got 900. And there's probably some icebergs hidden in there as well. So there is plenty of liquidity. So you say a person sold 5,000 down here at the low. They could get out. They're going to move it maybe 3-4 ticks, but they could get out. It's not going to cause this massive rally. And that's just sort of one of the things that irks me when I see, there's trap traders up here and cause this big market to sell off. Well, there's plenty of exit liquidity. So, but basically, look for imbalances around the price levels where traders could be potentially trapped. Okay, so being able to identify these levels, right here, here. Okay, I mean, you got not a huge move, but I mean, once you identify this in real time, 1 tick, 2 ticks, 3 ticks, 4 ticks, 5 ticks, 4 or 5 ticks in the bonds. I know some guys that trade bonds and tens, right? It's, bonds is 31.25 a tick. They're just trying to get 3 ticks out of the market. Thing is, though, that they're trading, 10, 15, 20 contracts at a time. So 3 ticks, I mean, that's my calculator. Do the math, right? 3 ticks and it's 31.25 is like $93, and you're trading 10 contracts. That's $900. But anyway, again, I'm not advocating that, but I'm just telling you that's how some traders approach the market, right? And it's identifiable in the footprint over and over, and it's just very useful if you have a tool, right, like the Orderflows Trader that can help you identify it. Right, that's why I created the Orderflows traders to help me see this, because honestly, if I'm looking at a plain footprint chart, okay, and this is just a plain vanilla footprint chart, bid, ask, point of control, right? I've got a lot of tools in here, and you can see I got exhaustion prints, imbalance reload, etc. There's a lot of things I like to look for, okay, and sometimes I can get lost in it and miss it, right? That's why I created the Orderflows Trader, is to help traders be able to identify things very quickly, right? That was imbalance reversal right down here, but something as simple as maybe an exhaustion print, okay, which is very little volume. It's sort of the opposite of imbalance reversal, which is a lot of volume. And if I could quickly identify, oh, hey, there's lack of volume up here, lack of volume up here, lack of volume, right? I can catch some decent moves, okay? Now, I do teach you guys how to identify this, how to look for them. I do have a series of videos inside the Orderflows Trader sort of members area that can help you see things that you probably don't know are taking place in the market, right? It's not all about heavy volume. Sometimes it's about light volume. But anyway, I digress. I'm going to end this video there before I start really going off on a tangent. So again, if you like my videos, be sure to hit the subscribe button, and I'll see you guys on the next video. Bye-bye.